Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 6th of April. China's data soothe concerns of further slowdown. Overnight, China's Caixin service sector PMI for March rose, adding to a mounting body of upbeat surveys for the month, suggesting that the nation's slowdown may have finally begun to stabilize. Both the official and Caixin manufacturing PMIs for March rose as well, data showed last week, with the official index entering the expansionary territory for the first time in 8 months. Although too early to draw any safe conclusions, these surveys could be early signs that the Chinese economy is in a better condition than it was at the turn of the year, and that the global turmoil of recent months may have subsided somewhat. Focus now turns to a plethora of Chinese data due out next week, including the GDP for the first quarter, as well as the trade balance and the CPI for March, which could confirm or disprove these early signs. Any concrete evidence of stabilization within the Chinese economy could boost speculation that Australia's and New Zealand's trade volumes with the country will regain some of their lost glamour, and thereby may boost demand for Aussie and Kiwi. Furthermore, such a development could lower the odds for further easing by the People's Bank of China in the near term, but we would like to see more data suggesting that economic activity has recovered somewhat before we get more confident on this. As for today, the only European indicator is already out. Germany's industrial production fell by less than expected, but there was no major reaction in euro-dollar at the release. In the US, the FOMC will release the minutes from its March policy meeting, where the committee remained on hold and reduced by half its median Fed fund rate forecast for 2016. Following the meeting, we got a panoramic view of the prevailing opinions among officials in the form of speakers. While many regional Fed presidents adopted a hawkish tone and called for a Fed rate hike as early as April or June, Chair Yellen put all these comments to rest by delivering a speech dovish enough to drive the implied market probability for an April hike almost to zero. The chairwoman highlighted external downside risks to the US outlook, especially the slowdown in global growth, as one of the main reasons the Fed adjusted down its forecasted policy path. She implied that until these factors begin to dissipate, we should expect the committee to move extremely cautiously. Given that following the meeting, many officials made themselves clear on how the Fed should proceed, we believe that the meeting minutes are likely to provide little extra information and thus could have limited market impact. In Canada, the Ivey PMI for March is coming out and expectations are for a rise. Given that the RBC manufacturing PMI for the same month rose above its 50 line for the first time in 7 months, we see a high likelihood for the Ivey index to follow suit. This could reverse some of the Loonie's recent losses, at least at the release. We have 2 speakers scheduled today, Riksbank Governor Stefan Ingves and Cleveland Fed President Loretta Mester. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.